Kavya was sitting on her laptop and looking at the chart of the metal index on her system. Himanshu asked Kavya what was she looking at. Kavya told that she invested in some shares and she bore heavy losses. Now she feels that she is stuck. Himanshu got curious to know where she is invested, and he added that his portfolio is doing well. Kavya told that she invested in some metal shares and the Nifty Metal Index has fallen 13% this year. Himanshu replied that he has invested in real estate shares and they have given very good returns. He said that the Nifty Realty Index has given 13% returns. Kavya got curious to know why Nifty Realty shares were doing great and what's going on in it.
The sectors that have benefited the most from the end of COVID phase include the real estate sector. Even with the situation returning to normal, people have started implementing their delayed plans to buy houses. However, the demand is currently higher in the luxury segment. With the increase in property sales, real estate companies have started recovering from a difficult phase. Their balance sheets have strengthened and they have begun launching new projects. All of this is reflecting in the performance of real estate shares.
The Nifty Realty Index has witnessed a surge of approximately 25% in the past 2 months. It is currently trading near its 16-month high. In comparison, the Nifty 50 has only experienced a growth of around 6.5%. The top 3 contributors to the Nifty Realty Index are Soba Limited, DLF and Mahindra Lifespace Developers. Real estate company shares have been consistently rising. Speaking about individual shares, Sobha Developers shares have witnessed an increase of approximately 32% in the past 2 months, reaching a level of 567 rupees on June 2nd. In the last 5 days alone, this share has seen a surge of around 12%. The company has good quarterly results and its sales have continuously gone up. Similarly, there has been a good momentum in the shares of Macrotech Developers, Lodha Group's company. These shares have witnessed an increase of approximately 21% in the past 2 months. On June 2nd, the share closed at 555 rupees and in the last 5 days, it has seen a surge of around 10%. The company has expressed confidence that due to strong fundamentals and consolidation in its supply, it can achieve a medium-term compound annual growth rate (CAGR) of around 20%, indicating annual growth. Analysts suggest that the real estate sector can continue to perform well in the future. Due to consistent demand and new launches, their pre-sales are showing significant growth. In the financial year 2023, these companies witnessed a year-on-year increase of 43% in pre-sales.
High interest rates do not seem to have any impact on inquiries or footfall in the real estate sector. Due to favorable affordability situation and a large population still lacking housing, these companies expect good growth in the medium term. According to Motilal Oswal Financial Services, due to consistent demand, sales for these companies can witness an increase of 15 to 20% in the medium term.
Motilal Oswal has expressed the possibility of rating upgrades for companies that have strong business operations and good cash flow prospects, indicating expectations of future growth. Now let's take a look at how these top companies performed in the fiscal year 2023. In recent quarters, real estate companies have shown significant business performance. The fourth quarter of real estate companies has been positive in terms of earnings, and there is confidence that the Reserve Bank will not increase interest rates further. This gives hope for sustained demand in the real estate sector. According to a report by Anarock, the value of residential real estate transactions reached up to 3,46,960 crore rupees in the previous fiscal year. Similarly, the number of sales increased by 36% to reach 3,79,095 units. In metropolitan regions like Mumbai, Pune, Bengaluru and Hyderabad, sales witnessed an increase of 45% to 50%. Godrej Properties has added new projects worth 32,000 crore rupees, while the Lodha Group has added projects worth 19,800 crore rupees. To maintain their growth, these companies have made significant preparations for the fiscal year 2024. Companies like DLF, Godrej Properties and Macrotech developers are showcasing a strong launch pipeline fueled by the enthusiasm generated by new bookings.
The property inventory is decreasing and prices are consistently rising. In the top 7 cities of the country, residential inventory has reduced from its peak level of 45 months in October 2017 to a low of 18.6 months of sales. According to a report, there could be an annual increase of 15% in construction volume of houses in the coming years. Investment banking and capital markets firm Jefferies stated in their latest Greed and Fear report that due to several years of downturn in pent-up demand, this cycle of growth in the real estate sector could continue for another 3 to 4 years. The Greed and Fear report also suggests that it is assumed that the central bank will not increase interest rate. It presents an opportunity for investment in property shares.
After COVID, we have seen a huge rally in the stock market, and there is one sector is growing exceptionally well. That is a reality sector, and you have seen so much buying momentum in these reality stocks. So I can say that in next couple of months or in couple of years, you can see the 18% growth from the current level. So definitely there is a certain demand in realty sector and infrastructure sector. So this sector will perform aggressively.
Jefferies has indicated a trend in the real estate sector that there is good growth in the middle income and luxury segments, while the affordable housing segment is experiencing a slowdown. This reinforces the fact that during COVID-19, the rich has become richer, while the middle class and the lower income groups have faced the brunt. Now the question arises, if there is an opportunity to invest in real estate shares, what factors should investors consider and which shares should they invest in? And most importantly, what should be the target?
In my point of view, there is a 2 stocks that are trading in a current valuation is very fine, and you can say that the EBITDA margin or you can say that the profitability will increase aggressively. Number 1 is a DLF. DLF right now is trading at around 480 levels, but you may see the level of 580 levels with the stop loss of 480. So there is an aggressive movement in this stock. And second stock is Godrej Properties. These days the sales numbers are increasing, and growth prospects are well. So you can see the level of 1650 with the stop loss of 1350.
One trend is visible. Although there is demand in the residential segment, but commercial space is lagging behind. Even the performance of affordable housing segment is lackluster. Therefore, it is better for investors to invest in portfolios that include 3 to 4 types of variety instead of investing in a single share. If you invest in any sector, it will be more beneficial only if you do it for the long term. It is advisable to set stop losses at the time of investment in any share, as it can help you avoid significant losses.